Okay, going to try a little walk and talk today. Want to talk about a fascinating book that I'm reading called Poor Charlie's Almanack. It's not actually a book written by Charlie Munger. It's a book that contains a number of speeches that he gave over many years to Harvard students, to Berkshire Hathaway shareholders, to many different people. So it contains a lot of wisdom, philosophy, tips, strategies, tools, models that one can use in a variety of different situations. Of course, there is a bent or a slant or a bias towards business because Charlie Munger was Warren Buffett's right-hand man at the helm of Berkshire Hathaway, one of the biggest companies, one of the most successful companies of all time. One of the reasons why I wanted to read this book is simply because Charlie Munger was extremely successful in his life, and he has attributed much of that success not to amazing IQ, although interestingly, because he was born in 1924 or 1923, around that time, he was conscripted into the army. So actually he fought in the Second World War, not on the front line, not in battle, because back then they had to take an intelligence test, and they discovered actually this man has a very high IQ. But he was assigned a job as a meteorologist in predicting, in forecasting weather patterns, and this was from an early age. So he's got a wealth of experience. He grew up during the Great Depression, but with his training and his life experience, he's picked up a lot of key information across many disciplines, and actually he encourages and endorses a multidisciplinary approach. He makes a big criticism of professors in that they often stick to their small niche branch subject, and they don't really venture out into other areas, much to their detriment and much to their inability to forecast accurately the real world and to make objective, accurate forecasts, predictions, judgments, decisions, because they're limited. But if you look at Charlie Munger's life as a whole, so he's born in the early 1920s. He grows up in the Great Depression. He was born into a middle-class family. His grandfather was a federal judge, and he grew up in Omaha, Nebraska, the same town as Warren Buffett. And actually Charlie Munger worked for Warren Buffett's grandfather in a grocery store. They never met when they were teenagers. Charlie Munger is quite a few years Warren Buffett's senior, so they never met when they were youngsters. But Charlie Munger joins the army. After leaving the army, he, like his father, goes on to study at Harvard Law School. He becomes a lawyer, a practicing solicitor, a job he holds for many years. He didn't like it very much. He also showed great proficiency in mathematics. He said that he could easily get an A in every maths test he took in school without, even trying. Didn't even put any effort in, but he always managed to get an A. And that again correlates well with what the US Army observed, in that his cognitive ability, very sharp, very fast, can detect patterns very quickly. So he becomes a solicitor, becomes very knowledgeable of the law, and then later on he goes into real estate, and he makes his first million and quite a few millions back in the 1950s, developing property. After this, he sets up his own private equity firm, his own investment firm. So he starts to become an investor, and then a few years down the line, he meets and teams up with Warren Buffett, and they enter a partnership at Berkshire Hathaway. This is in the 1960s. Berkshire Hathaway at this time is a textile business. It's going under. It's clear that the business model is not working. He describes it as a pretty grubby business. He didn't like it because there were problems with the employees, and he didn't like some of the management aspects of running Berkshire Hathaway as it was a factory in the 1960s. But over time they transformed Berkshire Hathaway into a company which owns companies. They famously bought See's Candy, a candy store, a chain of candy stores, and then they bought other, companies, and became shareholders in a number of others, including Coca-Cola, Gillette. There were a number of other companies they bought. Both Charlie Munger and Warren Buffett are value investors, in that they really look for what Benjamin Graham recommended: companies, good companies, selling at below fair value, selling for below what they're actually worth, below intrinsic value. But it was Charlie Munger who changed Warren Buffett's approach slightly. Warren Buffett said that before meeting Charlie Munger, he had a kind of cigar butt approach to investing. He would walk along the streets, and if there was a really, really cheap stock, even if it was a lousy business, he would buy it simply because it was so cheap. And he thought that, it would go up slightly, he could sell it, make a quick buck, and then move it on. But it was really Charlie Munger who said, it's better to buy a great company at a fair price than to buy a fair company at a great price. And he goes into the mathematics in one of his speeches of why this is so. So, for example, with the profit margin at a great company like Apple, Berkshire Hathaway, huge shareholders in Apple, if they've got profit margins of 30-40%, maintaining those profit margins over 20 years is going to produce more cash flow, more income, than simply buying, a company which is just on the limit. It's just about making a profit. Let's say 2% profit. Even if you buy that really cheap, mathematically it's a better choice to buy a great company, even if you're paying slightly more. But of course, both still very much look for value. Both sort of by default are quite contrarian, in that they shun the herd, and they are quite immune to sort of herd mentality, like piling into one particular company or commodity. They very much, I think it was Charlie Munger who came up with Mr. Market, the idea that there's plenty of opportunities. Mr. Markets, he may come to you one day happy, optimistic, doesn't want to sell, share price therefore is really high, but a week later he might come back much less optimistic, and thus the share price goes down. And he said that really most of Berkshire Hathaway's profits have come from just a few stocks, and like one every 10 years. And he's said that if a great opportunity does present itself and you're fully prepared, he recommends reading as much as possible from many different areas of life, not just narrowly sticking to one area. He's critical of professors in that there's a tendency for them to stick to one particular area, draw a circle around it, and ignore concepts, ideas, models, frameworks, which leads to inaccurate misjudgments. But he very much learned from his diverse life experience, as I said earlier, growing up in the 20s and having many different experiences. He had around 8 children as well, very early on. So it's quite wise in terms of his worldly knowledge of human affairs, and had quite a tragic incident with one of his children who unfortunately died as a child. So in reading Charlie Munger, you're reading from someone who really has lived, he died a few years ago, a full life full of issues and problems. He said that he's a great avid reader of biographies, and of course Benjamin Franklin was his idol. But he said that if you learn from your own mistakes, you'll do okay in life. But if you learn from the mistakes of others, you'll do fantastic. So he really recommends reading about what other people did in their lives, what worked for them, what didn't work for them. And with his famous quip, his famous recommendation, which is always to invert, he asks, if somebody asked him what makes one successful, how can one be successful, his response would be to change that question and to answer, well, what makes someone a failure? What would stop someone from being successful? Similarly, when Warren, used to ask him about a particular company, is this a good company, do you think to invest in? He would find reasons why it's not. He would try to find problems. One of his quotes is, a small hole can sink a great ship. So if there's a small problem with a company, he'll avoid it. So Warren used to call him the abominable no man, because he's quite a disagreeable personality, and he'll find problems with potential investments. And Warren that's why he was so useful to Warren, because he would phone him up and he would say, actually, this is terrible because of A, B, C, D, E. So very much a selective investor. Got fantastic returns himself in the 1950s and 60s and over a very long period of time. And Berkshire Hathaway is in the top 10 of the S&P 500. It's up there with Amazon, Microsoft, Apple. When you look at how much that company's worth, it's quite incredible. And really, it's Charlie Munger and Warren Buffett who are responsible for that. So the book, I'll just show you what the book looks like. It's quite an expensive book on Amazon. I think it's expensive because not many people have bought it. But this is what it looks like. This is the hard copy, which I very much wanted, because it's a book that I intend to keep for a long period of time and read again and again. There are lots of interviews of Charlie Munger on YouTube, which you can watch. But as I say, somebody very much worth listening to, very successful person, and a man who's done that much reading, that much research, lived for so long, grew up in the Great Depression with unimaginable levels of deprivation, whole queues of people on the breadline, starving, unimaginable level of suffering, really. People think 2008, 2009 recession was bad. Go and research the Great Depression and what was happening in the 1930s in the United States, and he lived through that. He was actually alive at that time. So someone like Charlie Munger can offer so much useful advice and wisdom. It's just a joy to read this book and to listen to many interviews that he gave. Hopefully you found this video useful. I will make another video. This is only part 1. I'll make part 2, hopefully summarising in a way that's more concise next week. Thank you very much.